Because of coronavirus, most of us got sent home. Like I got sent back to Colorado. Now, I've been home for about a month now, and I've realized living with my parents isn't really the best option, and I definitely in the future want to live on my own. Now, one thing is most of us don't have enough money at a young age. Well, one thing I've started is investing. Looking to invest in your future is a very good thing. Many of us aren't thinking about our retirement, but that's one thing if you start now, you'll have a great retirement. There's many different types of investing, savings accounts, stocks, bonds, mutual funds, and many of us haven't learned much. Like I didn't learn much in high school. And one thing I wanted to learn is investing because all these people talk about all the money they have and all the money that they don't have. And one thing is a constant problem is money. Everybody has it or you don't. And the thing is many of us young people haven't learned to invest. Now, investing is something that you can learn. You read, you watch blogs, you watch videos, you look up to people, and they all invest. Most of the people have investment firms for them, they have people that invest for them, or they do it themselves. And it's something that you can learn. Now, there's different types of investments. There's low investments, there's high investment. And these are basically are the risk levels. Now, low risks are bonds, mutual funds, stuff that you know you'll get most of your money back. Then some high risk investments are stocks, risky bonds, and other stuff. Now, at this time in the coronavirus, stocks have tanked because of some reason all the people think that these businesses aren't going to survive. And for some cases, some of these businesses won't survive. Now, stocks are common and there's a lot of them. If they are a public company, you can buy them, you can sell them, and many of which are very easy to figure out. But there's other stocks is the more you buy into a company, the more say you have. So you can vote on certain things. You could control who's your CEO. And the other ones, you basically just receive money from them if they do good. And so these are the reasons people like stocks, because you can control a company without doing work, or you just get paid by the company just for having money in there. Now, there's two different types of stock exchange, the New York Stock Exchange or the NASDAQ. Now these two, one's in New York, it's the big stock exchange with the bull out front, is the NASDAQ's also in New York City, and they also have stocks in the stock exchange. But those are the two most common stock exchanges in the United States. Now there's others around the world, but we don't really use those that much. Now types of stocks, there's income stocks, growth stocks, clinical stocks, defense stocks, value stocks, blue chip stocks. The most common stocks are income stocks is what you hear about the most, like, oh, the stock market's crashing. And a lot of income stocks from companies are in there, like Amazon, all those companies. The big stocks are income stocks. Now, there is other stocks in these companies, but income stocks is the most common. Here's a chart where it shows how stocks in these companies can change over time, and this is in 2015, so it just shows how much stocks can change. In the course of 3 months, they could go up, they could go down, they could freeze, they could drop. It all just depends on when you buy. So right now, during the coronavirus, many of these are really low, which is a great time to buy if you have money. For young people, it's a great way to start investing. With these stock markets so low, it is a great time to get in lower. So once you graduate college, you have some money in the stocks because when in doubt, these companies are going to bounce back if you put them in the right company. Now that's the issue. As you can see here with Ford, it was a big drop off. Ford went through different layoffs, different vehicle changes and stuff like that. So you got to make sure that you invest in the right companies. That's the issue with investments. Now there's bonds where you can get bonds from the government. And there's state bonds, there's education bonds, there's a lot of different types of bonds. And those are less risk. You basically give money, give like $1,000 to the government. And then on a certain date, they give you whatever interest rate you were locked into back. But sometimes those interest rates change, the maturity date changes, and then sometimes you may lose money. So there's still risk involved. It's just a little bit safer just because normally the government's not going away. So it's a little bit safer. Now, there's the different types of bonds, corporate bonds, government bonds. There's other things, but like I said, government bonds are a little bit common, education bonds. There's a lot of different types in there. Not going to cover much of those. And then mutual funds. Mutual funds are great, less risk, similar to bonds, but they're more involved in the stock market. So it's basically a group of people invest, pull their money together, and then invest in something. Normally, it's controlled by a group, so you just put money into that group, and they take your money and go invest in the stock market, bonds, real estate, all this stuff. And that's usually a lot more money. But there's really common mutual funds, there's a lot of them, and it just depends on how much you want to spend. Now, compounding interest is the one thing that is why you should invest when you're younger. If you have $10 and you invest it every week for 5 years, you will get $3,295 with an 8% interest. Now, if you invest $10 every week for 8,100 for $8,136 after 10 years. Now that's basically equivalent of not going to Starbucks twice a week, and you could have $8,000, and then that's like 80 trips plus to Starbucks. So I think it's important to start investing $10 every week, even if you're in college still. It still helps in the future because you're not thinking 10 years from now that you need $10. But I guarantee if you invest $10 a week and you have $8,000 in your savings account, you're going to thank yourself later. Now, many of you are like, how do I invest? Where do I start? One thing I use an app called Robinhood and Stockpile. These are free trading apps. Stockpile has a little bit of fee, but still a good service. So I use both of these, and you can buy stocks and companies. Now you have a set limit. You could buy small stocks or like a penny, less than a penny. In some stocks, you can range up to $1,000. This is just a way to start investing a little bit in the stock market just so the future you're not making as much risk and without knowing everything. Now, these are a great example of just like testing a lot of these because most of us don't have experience in this. So I say just start out investing small and try these things out because the future will look brighter. Because when you're retiring at 65 and you don't have any savings, you're going to look back and wish you started when you're 19. Thank you.